So when I talk to people, I hear people say, I look at my numbers and think, where do I start? And I want to increase my profit, but what things should I look at first? In the next 5 minutes, I will show you how you can increase your profit by using 1 hour to strategically reduce your overhead costs. And we do this by finding ways to get better value, not just cutting costs. If you want a full rundown on this topic, please check out our blog article in the description below. My name is Sally Wright, your virtual CFO. We saved Stephen $20,000 within 1 hour reviewing his overhead costs. So how did we do this? We identified Stephen spent 15% of his revenue on marketing costs and had high rent costs in the current market. And we suggest that marketing costs should be around 7% and that Stephen needed to negotiate for a better rental agreement. So Stephen was very happy and said that was much simpler than he expected, and he would be able to use extra cash to upgrade his computer equipment to create a better work environment for his employees. So for you to do the same, the first question is, what are the overhead costs? These are your fixed costs that don't result directly in sales. Overhead costs are ongoing costs that you have to pay regardless of your sales. Now you may ask me, what about rent and utilities? Those are constant costs which make them overhead. Well, how about insurance and maintenance costs? Those are overhead costs again. Now, office supplies, computers, fridge, accounting software, these are also overhead costs. If you're not closely monitoring your overhead costs, they are easy to overlook. So when you mix your overhead costs with other business expenses such as raw materials, manufacturing, inventory, other startup costs, your overhead costs can sneak up on you. But since they are not directly linking to generate revenue, there are some of those first expenses you should focus on when reducing your costs and increase your profit. As a small business owner, the most common way to calculate your overhead costs is as a percentage of your sales. Your goal should be to keep your overhead portion as low as possible. A small overhead portion means that a high percentage of your expenses go directly towards producing a good or service. Lower overhead ratios will provide you as a business owner with competitive advantage for sure. Okay, so your ability to price your products lower, and you'll be able to increase your profit margins and increase your bottom line. To calculate your business overhead, you will need to go through every specific business activity. So listing all your expenses. Once you've identified all your business expenses, then you want to put them into two parts. So you got the direct costs, which is the cost relates to your sales. And you also got your indirect cost, which is your overhead cost that not directly relates to sales. So when doing so, when you mark which one is direct, which is indirect cost, you ask yourself a question. Does this expense result in the production of a good or service? Once you've worked out all your expenses, add up all the indirect costs for the month. Then look at your company's profit loss statement to determine your monthly sales. Once you figure out your monthly sales, you can calculate your overhead ratio by using the following equation, which I'm going to list on the screen here below for you. So having your overhead or indirect costs at 30% or less, your sales is a good number. Now, if you're over 30%, you'll want to reduce your overhead costs to increase your profits. So when looking at your overhead cost, you should mark the items that are perhaps no longer necessary or very high in price or open to efficiencies. How do I continuously improve? How do I set up a process to reduce the cost or use automation to replace it? So consider cutting back on a couple of your expenses to see how they impact on your overhead costs. Here are some examples of what we can typically do. Number 1, you can cut unnecessary expenses. Maybe you have been buying some expensive office supplies, so consider bulk buying. Number 2, find a cheaper office space, perhaps move to a cheaper street in the same area or transition being a remote business. Number 3, review contracts with suppliers, go through all your contracts and pricing to negotiate better deals. With this information, you now know how costs affect your bottom line, and by reducing your overhead costs, you will increase your profit. If you continue looking at overhead costs each month, you will find other ways to cut back on your overhead costs and further increase your profit margin. I highly recommend that your accountant helps you calculate overhead costs, primarily to ensure that you have everything included correctly. You will now have a clear picture of your business running as efficient as it could be, and you'll be able to focus on other key things to increase your profit further. If you got value out of this, please check out our YouTube channel to subscribe for more financial insights. And please also click on the bell icon to get notified about our next video. I'm Sally Wright, your virtual CFO.